Hello and welcome to Pro Trader Strategies Market Commentary for Monday, February the 27th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Across the pond, no real economic data. Spanish flash PMI did come in, flash CPI, Consumer Price Index for Spain, came in at 3%, a little bit lower than the expected 3.3%. And then here in the United States, we got core durable goods orders, came in at a negative 0.2%, was expected to be a positive 0.5%. Now, core durable goods is a little bit more widely looked at than the regular durable goods orders, which came in at 1.8% versus the expected 1.6%. So a little bit higher than the expected on durable goods orders, but core durable goods rips out some of the more volatile aspects of that, which is transportation. So cars, airplanes, things of that nature are pulled out of that. The reason why they do that is because it gives more of a sense of what the real retail investor is doing in a sense, or what those manufacturers that service or supply to the retail investors are doing. And it's basically a judge of what the rising orders are to those manufacturing sectors. So an increase in activity, one would expect that the manufacturers are going to increase production to fill those orders in a sense. So a bit of a pullback on core durable goods, which is not a very good sign. Then we also got pending home sales, came in at negative 2.8%, was expected to be an increase of 1.1%. So a bit of a wet blanket there. And we also have Fed member Kaplan, FOMC Fed member Kaplan speaking here in a few moments actually. But the overall markets are a mixed bag for the most part. We've got crude oil cruising higher right now, up about 23 cents on the day. One caveat to that, U.S. is becoming a contender in exports, believe it or not. With all the fracking going on, we have so much oil here. We actually have more oil than Saudi Arabia and the Middle East, OPEC, if you will. In this oil that we have found in fracking, it's much more difficult for us to pull that oil out, so we need a higher price point with oil. Right around here at the $50 makes it profitable for them to start ramping up production. So we are a major contender. I think it was it's about a 10 or 15 year high on exports for oil from the United States. We've been a major importer for the greater history, if you will, but as of recently, the last year or so, we've been the major export, or becoming a major exporter, I should say. On to gold futures, /GC, up $6 on the day, continuing to cruise higher as it's really got the bears on their heels right now, and continues to push higher. As soon as we got above that 200-day moving average, the bears really started getting nervous, and it looked like they're pulling back a little bit. Then on to the bonds. Bonds are off on the day just by a smidge, down 3 ticks on the day, as the broader market is really trying to figure out what's going on with these worse than expected data points. The equities are a mixed bag, as we can see with the Dow Jones Industrial Average. It's been the one that's kind of been leading the charge to the upside, while the others have been a little bit mixed. But today, Dow Jones giving up just a little bit, down 13 points on the day. That's not anything major, really. It's really kind of a quiet day here today on a Monday. We've got the NASDAQ down 6 also, while the E-mini S&Ps were up last I checked. But The NASDAQ down 6 points on the day as well. So what I was talking about with E-mini S&Ps, unchanged for the most part, up a quarter, but at the end of the day, it's been pretty much a lackluster, no directionality in the markets for the most part. As you can see, overnight we did kind of go up there and print those highs. It's going to be yet to be seen. You know, I've always talked about this. The market likes to print those overnight highs, especially when they're historical, in the day session, because they want to be the big dog. It hasn't really seen a real push for that yet. We do have the lows printed in, but have not gone up there and printed those highs. I don't know if we will today because of this economic data points. Probably going to be up to what Kaplan has to say to really stir the markets up, because we don't have any more economic data for the rest of the day here in the United States. We do have Japan's industrial production and retail sales coming out, but that's this evening, so that's not going to really drive any markets. It's going to mostly be talking heads that's going to really move this market, but we really haven't seen anything in regards to that. With U.S. Steel, this is one that I was talking about on Friday in the webinar on how to set up a long call spread. I have a lot of rules that go into this. It's not just going out there and buying a call. There's different rules, this way to set this up, you know, whether or not you're really bullish or you're mildly bullish in a sense. I talk about different ways to really pay for that extrinsic value so you can synthetically buy the stock slightly under where it is currently trading, which is kind of the way I set this up with U.S. Steel, ticker symbol X, and followed right along with those lines. It was one of the few ones that really worked out nicely on Friday, so I decided to put that on today. And what I did was I went into the April contract, so it's, you know, over 50 days to expiration. I want to do that, give myself a little bit more time to be right, and get out of some of that theta decay that we're going to be seeing. So in the April, I bought the 34 calls and then sold the 40 calls to help finance that extrinsic value, and I ended up paying $2.85 for that. So that is right in line with all of those rules. So if you haven't seen that webinar, go to protraderstrategies.com, sign up for that. That's all I got for you today. If you can't take that, take it easy.